It can be difficult juggling your family's financial priorities and determine where to direct those dollars. Save for retirement, pay off debt, set aside money for a new car, or start saving for your kids' college. But there's an easy way to cut through all the clutter and start making progress towards your family's financial long-term goals. I'm Naj Srinivas, and I'm the host of Fisher Investments Market Insights podcast. In this excerpt from a recent episode of Market Insights, we discuss a simple way of starting to set your financial priorities. No spreadsheets involved. To help us out, we talked to Jill Hitchcock, the Senior Executive Vice President of Fisher Investments U.S. Private Client Group. Jill has been helping people define and reach their financial goals for over 20 years, and she's in a unique position to share some of what she's learned about harmonizing your family and finances. In her recent LinkedIn column, Jill wrote about having a financial date night to kick off your long-term planning. As we talk about that column, Jill covers some easy steps to uncover your family's true financial priorities. She also walks through how to start translating those priorities into a saving and investing strategy. Here's an excerpt from my conversation with Jill Hitchcock. Please enjoy. So, what's the first step in your family financial date night?
So if you don't already have a financial plan for your family, the first step is to start by laying out your long-term goals. So for me, I'm in my 40s. I have kids coming up with college expenses in about 8 years. And so for me, I'm drawing out what maybe the next 20, 30, 40 years look like in terms of both big expenses I see on the horizon, as well as goals around when I might want to retire, when I might want to do a big trip, or other big milestones. And I'm not a spreadsheet person. And so I don't map any of this out in a spreadsheet. For me, I'm more of a blank piece of paper, scratch out a timeline sort of person. And so I think that you start by taking a blank piece of paper and both of you doing that exercise independently to see how aligned you are. You draw out a timeline and you put in the big milestones. And that's a great first step towards thinking about what those goals might be and what those milestones might be, and then comparing the two pieces of paper to see how well aligned you are.
After you've got your timeline that's been harmonized between both partners, what's next?
Once you have a timeline established, then you start looking at inflows and outflows. So typically for most people, the inflows are pretty easy, right? You know how much money you have coming in every month or every year. The outflows are a little less fun. And for many of us, it's hard to really categorize or keep track of how much money we're spending. And I'm a big advocate that it's not the little things, right? It's not the little expenses that will drive you crazy trying to track down every nickel and dime. It's the big expenses that really matter. And what you're focused on is major inflows and outflows. And so do you have an idea of what it takes to sustain your lifestyle on an annual basis, and whether you're saving money every year, breaking even, or going into debt every year? So that's a good starting point. And once you have an idea of that, then you want to set some high-level goals. So if I want to retire in 10 years or 15 years or 20 years, I can do some pretty basic math to figure out how much money am I going to have by then, assuming some realistic rates of return, and whether I'm on track for those goals. One of the things we often talk to our clients about is that their time horizons, which is the amount of time their money needs to work for them, are often much longer than they expect. So people are living longer. If you have a younger spouse who is likely to outlive you, then you need to factor in that person's life expectancy. If you want to pay for things maybe like a grandchild's college education or a down payment on a house, but people often underestimate how long their money really needs to work for them. And the implication of that is that people often need more growth from their portfolio than they might otherwise anticipate or expect.
That was an excerpt from my conversation with Jill Hitchcock, Senior Executive Vice President for the U.S. Private Client Group at Fisher Investments. If you like this podcast excerpt, subscribe to Market Insights wherever you get your podcasts. Thanks for listening.